Welcome to another edition of What You Need to Know. Mike Richardson here, and today we're going to talk about something I call municipal legalese. We're coming up to our annual town meeting in about 3 or 4 days from now, at which time you, the executive branch of Mashpee, decides where your money is spent, how it's spent, and how much you're going to spend. During the course of the town meeting, you're going to hear things and questions and comments and directions about how money is going to be spent. And in the middle of all that information will be words and terms that you've heard before. And you're going to say to yourself, what exactly does that mean? Today, I have Dawn Thayer with me, the finance director of the town of Mashpee. I call her the author of these terms, but she's not really the author of these terms. It's just that these terms are part of her day-to-day business. And when we put things together that you have to read, they're all included in the data. So what we hope to do today is talk about some of the terms that I find most confusing. I hope you also find most confusing. And at the end of this session, you'll know more about what they mean and make it easier for you to make a decision. So Dawn, who's been with the town of Mashpee for 25 years, has a lot of background and a lot of information in finance. So she's going to make it very clear to you today what those terms mean. So I want to start with one that's very familiar, it's very well known, it's stated all the time, but I really don't know what it means. Free cash. Dawn, what does free cash mean?
First of all, I did not make up the term.
Okay.
It is an official term used by the Department of Revenue. It was first used in 1923 by the Commissioner of Revenue to the Board of Assessors in a letter. They referred to the unappropriated cash on hand as free cash. That term stuck from that point on, and that is what we call it, the official definition of our unappropriated available funds is free cash.
So it's really not free cash.
It is not free, no.
And so therefore, we're all going to spend it, but it's not something that we just find someplace else. It's part of the overall financial package.
Correct. It's a funding source.
Funding source.
Correct.
Okay. A second term that you hear all the time is a term called cherry sheet. I have no idea what that means, and people have said, what is a cherry sheet? So what's a cherry sheet?
Well, first of all, the name cherry sheet comes from the cherry-colored paper that it was originally printed on, and it is an official notification from the state to the city, towns, and regional school districts notifying us of the state aid and our assessments we are to be charged for the upcoming fiscal year.
Okay, so cherry has nothing to do with it, just the color of the paper.
It's just the color of the paper.
But what it really is, it's money that we're provided to and or assessments to the town from the state.
Correct.
Okay. There are terms called cherry sheet offset and cherry sheet assessments. Are they the same thing, or?
When we receive notification of the state aid, part of the aid, the receipts we're receiving, is called offsets, and they need to be used for specific purposes. They can't go into the general fund. For example, we have a library, we have state aid that is received for library purposes. We have to put that in a separate fund, and it has to be used for the library. So when you receive your notification of receipts, those items are listed on there, but you cannot take those into consideration when you're creating your budget. They have to be separated out. So when we're calculating out our available revenues, we have to take those offsets out of the mix.
Okay, all right. Now, when in the course of every year you hear Proposition 2.5. Growing up, the word proposition meant many different things, and my understanding was something about taxes. So when we say Proposition 2.5, or that term, what exactly does that mean to the residents?
Proposition 2.5, it was it became state law in 1980, and basically what it does, it restricts the revenue collected through local property taxes to 2.5% over the prior year's levy. You are able to add your new growth, but it's a way to control the increase in your taxes. So we can only increase our tax levy 2.5% over the prior year.
I guess that's protection for the residents.
Correct.
It's a limit to
Yes.
some degree that they limit their exposure, I guess.
Yes.
Okay. Now, we talked about free cash as a term that was very misunderstood. There's another term, and I try to associate them together, is called debt exclusion. In my mind, debt exclusion means when my wife says I can't buy something. So I've excluded my debt, but that doesn't what it means for the town. What does it mean for the town?
For the town, a debt exclusion is normally passed for a capital item, and it allows you to, where we have that Prop 2.5 restriction, it allows you to raise the amount of debt annually for whatever that project is, over and above that 2.5 limit. Annually, you add it to your tax levy, and we raise the taxes for that purpose, just that amount. It's only for the life of the bond. Once the bond is done, that increase in the tax levy goes away. So it's not a permanent increase, it's an annual increase year to year, just for the debt that's due.
Okay, so it looks like another form of protection for the resident, that on any given year, if there's something large that has to be paid for, if you do it through a debt exclusion, once you're done paying for it, the town folks don't continue to pay for it in their taxes.
Correct, unlike a permanent override.
Okay, well, I guess that goes to the next statement then, override. When we talk about Proposition 2.5, what's an override mean? I think I have it, but for the folks watching, what does override mean?
An override is allowing you to increase your tax levy by more than that 2.5% allowable amount. So when we talk an override is a permanent increase to the tax levy. Debt exclusion is a temporary, the life of the loan. An override permanently increases that levy. So when you go to the next fiscal year, if you vote in an override, your base levy that you're starting with is going to be increased by that override amount. So it permanently increases that levy amount.
I will make a resident statement then, an override is something that I would not particularly care for.
And I have to tell you, since I've been here, there has been no override, permanent override passed.
So for the purpose of this show, we can say in the 25 years you've been here, we've had no override.
That's
permanent.
correct. That's correct.
So for you folks watching, Dawn's helped you out quite a bit there. How about bond rating? I mean, we hear about bond rating, you hear about it all the time, why it's important. So why is it important?
Your bond rating.
And what is bond rating, first, I guess?
Your bond rating is basically your credit rating. Just like when we go to borrow for a mortgage, they look at the liability that is out there for you and the ability for you to pay back the loan. So our bond rating is basically a credit rating for us, and it's a pretty involved process when you go through the rating process. And what it does is they look at all different kinds of items that would make you financially stable. They look at the ability for you to pay your future debt. And what happens is they give you a rating. Highest rating is AAA, which town of Mashpee is AAA. And that entitles you to normally a lower interest rate, just like it's when you have a credit rating. Plus, it also makes you very attractive to anyone who wants to invest in your debt. So the more stable you are, the higher your credit rating, the better interest rate you'll get, and more people would be interested in investing in you.
I guess that would be, when we talk about not ever having an override, that would work wonders towards our credit rating.
Absolutely.
Okay. So another term that you hear about, and I think it makes some sense, is like non-tax revenue. Now, tax revenue is what we all pay based on the value of our homes, I'm assuming?
Yes.
So what's non-tax revenue?
So non-tax revenue is any revenue that is not in the form of property taxes. We consider non-tax revenue to be our state receipts. That's one item. All of our permits, building permits, transfer station stickers, beach stickers, anything of that nature that is revenue coming into the town, but is not through taxation. The one exception that we consider non-tax revenue is the excise tax, which Technically is a tax, but it's not a property tax.
So, from a layperson's perspective, the amount of non-tax revenue that we're able to obtain through the town helps offset the tax revenue.
Exactly.
So when people are asked to pay a fee or a fine or something along that nature, it's not all negative, and there's a good reason for it, because it helps offset some of the taxes that they're going to get, which are on a permanent basis once they're built into the system, right?
Correct.
Yeah, I'm getting it. So now you have the money, whether it's through non-tax or whether it's through tax revenue or whether it's through free cash, so there's various sources. We talk about how do you appropriate. There's a phrase called appropriation and transfer from revenue available for appropriation. That's a lot to say. I assume that means that you look at all those areas for purposes of funds that you can use for various things. Is that what that means?
Yes, it's basically taking all of these different funding sources, bringing them together, determining what amount you have available from each source, and that's what we use to fund our operations. So revenue available for appropriation is free cash. That's one funding source. The appropriation and transfers that you hear in the omnibus motion, that is special revenue that has been set aside for a specific purpose. An example of that is street betterments. As we take on more streets in the town, people pay back their betterments. That goes into a separate fund, and when we go to pay back the debt for those street improvements, we utilize those funds to offset the debt, so that the taxpayer is not, the average taxpayer is not covering that portion.
Well, I think it's more clear to me. I hope those watching, it's more clear. It's not a simple science. I mean, it gets confusing because there are so many component parts. Today, what we wanted to do is try to clarify some of the terms for you. I would ask if you have other terms out there that are confusing. I'll offer Don Thayer as a means of explanation should you need it. And we'll be back someday to finish this topic again, maybe after the town meeting, and hopefully what we offered you today for explanations will help you make the right decision. So we'll see you at the town meeting. Make the right decision, and that's it for this edition of What You Need to Know with Mike Richardson. I want to thank Don Thayer for participating, and we hope that you learned something today. Stay tuned for our next edition.